GM boxes. Oh,
GM Willie.
What happened to lo-fi beats?
I don't know. Someone removed it probably because we were starting.
I'm gonna bring it up just for a second while I wait for folks to trickle in. And IHAM, you should have an invite to come up on stage. DM me if you're having any trouble with that. Hey, good morning, IHAM.
Hey, good morning.
What's up, Shadowy Ed?
Hey,
You can hear me, guys, right? Can you? Oh, okay, fantastic.
Yeah, we can hear you guys. Shadowy Ed, love the pseudonym. Haven't seen Ed and Eddie for so long, but that was definitely one of my favorites growing up.
Oh yeah, mine too.
All right. How's your day going, guys?
Oh, best day ever so far. How are you guys doing?
Doing great. I'm calling from Austin, so it's kind of rainy today. It's good for a change.
Yeah, we need
Doesn't
it.
rain much here.
Well,
yeah.
it never rains in Metaverse, so.
Digital rain. Where are you calling from?
Unless you wanted to, of course. Yeah.
That's right. Where are you calling from, Shadowy Ed?
I'm calling from Metaverse.
The Metaverse, of course.
Somewhere on Earth.
Nice. I was testing it. Good answer. Do you have anyone else from the Silo team joining?
No, I think we're good. Not sure if Zeros or Tyler would like to join, but I think we're good here. So the both of us.
Awesome. Well, let's go ahead and get started, and I'm sure we'll see some more folks trickle in as we go. But yeah, welcome everybody. I'm really excited for this community call with the Silo Finance team. For those of you guys that haven't heard yet, ShapeShiftDAO recently invested $50K into Silo's seed round, and they're actually getting ready to do the public token auction December 6th. Public, but you need to be whitelisted. So today we're going to learn about Silo Finance and their new lending protocol, which is really cool. I'm really excited to learn more about it. And also we'll hear about their token auction and possible integration with ShapeShift. And we have a little surprise for you guys. We have a kind of a UI UX prototype of what a Silo integration could look like in the new version of ShapeShift. So excited to share that.
Exciting.
Yeah, super exciting.
Awesome.
So yeah, lots of great stuff to cover today. Why don't we start out by just hearing a quick intro from IHAM and Shadowy Ed about yourselves, and then we can do just a quick overview of Silo.
Yeah, sure. So I'm IHAM, or you can call me AJ. I lead growth for Silo. So kind of been a really exciting journey. It's only been like a month and a half since we graduated the hackathon, the ETH Global Hackathon. I'm super excited to be on the call today. Really fantastic community you have here. Hopefully we'll get to know the community more in the days to come and really align closely with your community, guys.
Yeah. So I'm Shadowy Ed, at least in this metaverse, and I've been doing smart contract development since early 2017. So I've been in blockchain before DeFi, and I could witness how it was created, and I'm really excited about Silo and be part of this journey and new wave of lending protocols, which I think is going to really revolutionize how we do lending, and it's just exciting to be in the middle of this.
That's awesome. Wow, developing smart contracts since 2017. You don't get much more experience than that. So what is Silo, and why are you guys so excited to be working on it?
You want to take that, IHAM?
Yeah. So the basic idea here is that how can we use any token as collateral to borrow another? So pretty much the way that Uniswap, when they started, you could swap any token for another. We wanted to do lending in the same way. So that's kind of the big vision. So any token can be collateral to borrow another. That is kind of the vision. So, but in order to do that, while remaining secure and safe, we have design this protocol in a way that we isolate markets yet completely, yet we connect them through basically one asset, say the ETH. So ETH is kind of the common denominator across all markets. So now you have isolated market, but because there is a bridge in the middle, you're kind of de facto creating this mega pool of isolated markets where any token can borrow another in the space. So that's pretty much what SILO does.
Wow. So that's quite a big game changer from the current state of lending protocols.
By the way, so Tyler Reynolds, our advisor, is here. If you'd like to invite him, would love to join. Yeah.
You
Sure.
better inviting him up right now.
Yeah, just invited him up. So a question about that, and I think is good for this community to understand in the group. So if I understand correctly, this would basically allow for any asset to be permissionlessly added to the protocol, right? Just like Uniswap. Does this mean that it doesn't require any oracles, or what does that mean on that front?
So of course it does require an oracle, and you know that permissionless part is actually a big challenge in the lending market protocol. But the way we're solving this problem is that our oracle is designed to be supporting a protocol, a DEX protocol. It could be, Uniswap v3. It could be Chainlink. It could be Balancer v2. Really, any protocol that that community considers safe to use on the oracle. And then when you add that permissionless asset, our protocol is going to really search all these dexes and try to find the highest liquidity pool, and that pool is going to be used as an oracle for that given asset. This could be and will be improved because you can do really crazy things in this process. But the whole point is that the oracle choosing process is totally trustless. So we're not based on user input. Our smart contract is choosing that oracle based on the on-chain data.
That's awesome, and quite a big differentiator from the current lending protocols that typically either require some governance vote, like for Aave, Compound, and Cream, or for like Ferrari, where it is permissionless, but we don't have that same benefit of isolated risk. And also, there's another really unique aspect of SILO that I think is quite a big differentiator from those other kind of buckets of current lending protocols, like the Aaves and the Compounds and the Creams and the Ferraris, which is the deep liquidity versus fragmented liquidity. Can you talk about how that is different than the current major lending protocols?
Yeah, so I think Kashi is a very good example here, and Kashi was actually probably the first protocol that did isolated lending, or like one of the first at least. And obviously they did very good job in isolating that lending. But when you isolate given markets for tokens, you're running into an issue of fractionalized liquidity, which means, and you can see that on Kashi very, very easily, which means that for, let's say, DAI, you have almost 40 different markets. And the result of that is users cannot really find a good and efficient place where to put their tokens. Like the yield is really low, the liquidity is really low, so like the whole market doesn't really make sense and like doesn't work essentially. And that was one of the big challenges that SILO is solving, is to create a single place for every single token to provide liquidity into. And but that has another challenge, because Kashi allows you to deploy really any pair, right? You can do DAI USDC, you can do DAI ETH, you can do DAI comp, you can do anything you want, really, any combination you want. And now when you create just single pool, like what is the other side of the pool? Like what do you choose, right? And the problem is, how can you decide for millions of users? Like, that's impossible. So what we came up with is the idea of the bridge asset, right? So we actually, if you create that DAI pool, we as a protocol decide that the other part of that silo is going to be ETH. And if you want to collateralize DAI and borrow Uni, what's going to happen is that you're actually going to collateralize DAI, you're going to borrow ETH, you're going to take that ETH and move it to the Uni silo, collateralize that Uni, and collateralize that ETH and borrow Uni. And that way, we kind of achieve this ideal solution where you isolate the risk, you do not fractionalize liquidity, you actually concentrate liquidity in one place, and also you have this efficiency of literally borrowing anything for anything you want. So like you have all of the freedom.
That's just differentiation from Cashi and the likes of Cashi. When you look at right of use, we just go back to the same problems with shared pool lending protocols, because each fuse pool is technically a mini Aave. So you've got 10, 20 assets, and any one of them, if you can exploit any of them, you can actually steal, can simply run away with the assets of in the pool. And but then, yes, I said it's very much like mini Aave, but there is actually a big differentiation. Aave is kind of protected by governance. The entire governance decide what to whitelist. Within a right of use, there is actually a manager, so pretty much can have they have discretion over what happens in that pool. And so basically, you create kind of efficient pools, but then you remove this governance from it and it becomes dangerous. So pretty much I think that's by design, of course. They have kind of certain use cases in mind. So what we wanted to do is just how do we provide this stable, isolated market that always consistent. No one can add or remove assets from them. Once the silo is deployed, it's consistent. It just exists. It concentrates liquidity, and because the bridge asset exists in every single silo, that basically brings efficiency and security as well to the protocol.
Awesome. Thank you guys for that really great overview. I think that helps paint a great picture of Silo and what differentiates you guys from the other lending protocols. And I can see why you guys are so excited about this, because this really does seem like such a game changer to the current state of lending protocols, which have already been such a big game changer themselves. But we're kind of just the first stage. I guess maybe we're getting to like 1.5, and Silo really feels like a next step evolution.
Yeah. We're excited too.
Yeah. So are you guys, I imagine this will start with ERC20 tokens, especially because they're going to be all paired with ETH. Do you guys have plans for enabling borrowing and lending cross-chain?
Well, I think before we go cross-chain, we want to, with other different standards, actually we're kind of talking about it internally. What if one day or soon you could borrow against your LP tokens? So that's a different, of course, different standard, ERC 721, and maybe other standards. So cross-chain is definitely important. But I think in the beginning, we're trying to focus on how do we to build this when we deploy, when we establish ourselves on the Ethereum blockchain, and then there are a couple of fundamentals that we need to take care of. For example, the Oracle infrastructure, of course, making sure the interest model that we use is optimized, liquidity flows, to the protocol, and then we can decide. Honestly, we don't want to overpromise. I think if you're successful on Ethereum, it's pretty much easy to scale into other, side chains or even L2s, or of course other chains as well.
That makes sense. Well, excited to hear that cross chain is on the tentative long-term roadmap. But yeah, I agree. It makes sense to, you guys have quite a bit to focus on just with ETH alone to get started. So question from the audience, what chains are being targeted currently for implementation? Are you guys looking at any other EVM chains yet?
I think this brings us to what I have just said. We're targeting Ethereum right now, and we want to really nail this implementation. And you know, there are by the way, there are also lots of challenges, you know, on the lending platforms that we have to, you know, we have actually a lot of ideas how to improve on them. You know, all the hacks that we've seen regarding, you know, Oracle manipulations, and also the interest rate model. I don't think we really touch on this one, but actually we're going after dynamic interest rate model that is based on the PID controller, which to my knowledge, the only other project that is attempting this is Euler. Which, by the way, it might seem like not too difficult task, but it's actually very complicated. So going back to your original question, for Hackathon, we actually deployed on Polygon, and it obviously very easy thing to do. But I think our focus is on Ethereum as of now, and the moment that we have a stable protocol and you know, we feel confident in what we have, it's going to be very easy to expand to other EVM blockchains. I mean, from my experience, that's really the easy part of the job.
Makes sense. Thank you. So yeah, that brings up a really an interesting question. So I know on other lending pools, there's a curve for the utilization rate. There's different borrow rates for different assets and on different lending protocols. And because Silo is going to be permissionless and there's going to be one deep liquidity pool for each asset, how is that? How are those, you know, parameters like the borrow rate and the utilization rate configured?
So this is actually a very loaded question. Well, I think the most important part is that we're going to have a somewhat default model, and that is going to be tuned to be as universal as possible. But obviously, you know, that model will be, well, no good for stable coins or other, you know, very high quality and stable assets. So in that scenarios, the governance will be able to, you know, update, change the model to something more suitable after deployment. So essentially, when you create a new silo for your asset, and let's say that asset is, I don't know, DAI, then yes, by default, you're using kind of universal model, but after that, the governance can change that to something much more efficient. In the future, we also have, we're doing a lot of actually research. We teamed up with researchers that specialize in you know, I forgot the name of the scientific name for that, but basically they specialize in control theory, that are actually helping us to design those PID models for cryptocurrencies. And we actually have an idea how we could automate that process as well. But for that to really be ironed out, we need the protocol to run for some time. We need to collect real world data. We need to see, we need to be able to kind of judge what kind of tokens, how different kind of tokens and different markets really react to the interest rate change for our model, and that will give us excellent base to actually go and figure out what is the best model for stable coins, what is the best model for established assets, what is the best model for new assets, and then based on the on-chain data, similar to what we do with Oracle, we will be able to actually choose the best model for each asset on the fly. And then in some edge cases, governance can still override this decision, but most of the time it will be a correct decision.
Maybe I can add something here. So basically, the idea here is usually interest in lending protocols. The existing lending protocol is a function of utilization. Do you have a lot of liquidity available? Then the interest drops. So here the controller theory comes in and says, okay, we'll take more input, not only from the system, inside the system, but what if we can listen to competition? So if stablecoin borrow rate is, say, low on Compound, we can even actually lower ours. So that's just one input from competition. And of course, the space is way complicated than that, So that's kind of the things that the theory says that can be possible, of course, but it's a long way to kind of explore it. So that's why we need the data first, and then we start kind of tweaking this idea. But then back to your question about this, why starting with conservative collateral? So basically, because we're permissionless, we don't want the users to experience, to have bad experience using our pools. So we start very conservatively across the board, and then we start adjusting these pools, the collateral on these pools, like Ed said. For instance, USDC, instead of starting at 50%, we can increase it at to 80, 90% loan to value factor. So, and this kind of the things that we can adjust, but of course, if you have data, we can provide to the community, so we can tell them like, hey, this is the best way. So at least we guide them into deciding what collateral factors. Governance would be the second, I would say, kind of defense line. The first line would be like setting conservative collateral, but then the second one would be like the community that they can decide to increase and adjust these collaterals. But then if we provide them with data, that would make anyone and everyone actually make it easy for everyone to decide, at least to vote yes or no based on that data.
Awesome. That sounds like a really, really thoughtful and smart approach to that. And excited to see how it all plays out in real time. So we've got Kent on stage. Kent is the leader of our tokenomics work stream. Kent, did you have a question?
Yeah. Hey, guys. Thanks for joining us. I think I can speak on behalf of most of our community when I say, we're really excited about this opportunity to get involved with you guys. It's such a unique and unmet need right now. I was wondering if you could speak a little bit to your near term to intermediate term roadmap in terms of key milestones. It sounds like there's some important stuff you guys need to do in terms of de-risking. But is there a general sort of ETA for when things might be rolled out into prod, at least in sort of alpha form, and just in terms of timelines?
Yeah, sure. So the immediate focus right now is to launch our beta. That's in January, hopefully Jan-Feb. We need, after, of course, some security audits. Once that's done, we kind of attend to the fundamentals here, adjusting collateral factors on some of the strategic silos that we want to kind of focus on, mainly stablecoins. And the interest model will kind of actually started on that, but definitely will need to be optimized. I think a third key milestone for us is to kind of examine this Oracle kind of infrastructure. Of course, it can say more about that. So that will keep us busy for, I would say, 3 to 6 months. But then at the same time, we expect the community to kind of work together into utilizing the protocol on liquidity that we hope to raise in the upcoming token auction. And I think that will also keep us a little bit busy. So where do we actually, what can we do with it, with this liquidity that we raise? And we have clear plans, but of course it's controlled by the community. So we'll see with them where we can utilize it and what end. So this is pretty much the kind of, from at least what I can share myself, but of course Ed as well can tell you more about the technical roadmap.
Yeah, so definitely we're aiming January, February for our release. And after that, the big part of our work will be, like Iham said, will be the interest rate model and the oracles. The oracles obviously will be very well tested, and like it will be ready to go as we release. But what I mean by working in oracles is that there is a pending research that we're doing, and actually Euler also released not so long ago. Like, how can we protect better? How can we make sure that the oracle manipulations are much more expensive, and actually how can we make them unprofitable for attackers? Because that's really the end goal. If you cannot make profit, then like attack doesn't make sense, or well, at least most of the time. And on top of, if we combine this lack of profit with other security measures, we might end up with, we might really put those oracle manipulations attacks as a thing of the past. And that's the research that we're doing, and we have to, like, we will be doing after the release as well. Probably other protocols are doing that as well. The second part about the interest rate model, like I said, the live data that we're going to collect on how users interact with the protocol, and like how our model that we're creating right now is going to react to that usage, is going to be priceless. So this is really super exciting for us. And based on that data, we can, like I said, we can really create extremely efficient and sophisticated models that will really provide true market, that will not only stabilize the silos and the token markets, lending markets, but also will give the best possible interest rate. So that's, from technical point, that's two biggest goals.
There's also something that, of course, guys, we've talked about it, we've tweeted about it, working with you on decentralizing the user interface, and I think that's a monumental challenge for everyone, especially when you talk about permissionless lending pools. You want the user to discern the risk they're taking immediately. So let's say there is someone creates a pool for a token that they should not trust for any reason. And there's certain things that we can do, kind of signaling to the user that, okay, there's something, just be aware that this might be risky for you. So do not deposit, let's say, or then they can make the decision. You give them the data and let the user decide. And I think that should be very important. And I think it's part of actually one of the focus for us is to, so yes, you can combat security by design, which we've done by isolating markets. And then there's also user education that needs to happen. That needs to happen in the right context when the user visits a user interface and they're looking at a user a pool. And of course, there's an APR of 20% because there's a demand for the bridge asset in that pool. Well, the user needs to understand what type of risk they're taking. I mean, we've seen recently that Aave, for instance, they've been exposing users to some risk with DPI and XSushi, but no one in the community at all have kind of learned about this before the fact, before actually that came on Twitter. And that tells everyone that you could actually be sitting on a problem but not knowing. But you can use data. You can always check if that token highly centralized in one wallet. So then definitely there's something wrong. And there are other factors as well. And then you can signal that to the user like, hey, wait a minute, do not participate, or at least learn about the risk before you participate. And that's something that we really look forward to working with you guys in the user interface. And of course, that's a lot of work in that, and combined and in tandem with the security that we provide by design, by isolating markets. I think that will bring security that we aspire to build really in our pools.
Great. Yeah, thanks for those very clear answers. And I know that's one of the super exciting things is, the potential collaboration on the interface front. Just as a really quick follow-on question to that, with respect to oracles, are there any unique challenges that emerge, let's say down the road, 6, 8, 12 months, Silo has decided to migrate to a roll-up say either optimistic or ZK. Is your approach to oracles easily portable over to that type of layer 2 environment, or are there some challenges that emerge as a result of kind of having maybe different data and on different chains and that kind of thing?
Overall, this is very portable solution. So, but as any lending market, we really depend on stable DEXs. So, in case, for example, if we were to launch on Optimism or Arbitrum, then obviously our go-to DEX or like source of prices would be Uniswap V3 as well, right? We could use other protocols too, but that's also depends on the security. As everyone is probably aware, like that new wave of lending protocols are not supporting Uniswap v2, and the reason is, it's extremely difficult to keep and extremely expensive to keep TWAP Oracle up to date, and especially in our case where we totally permissionless, it's really impossible task to keep up to date hundreds or even thousands of different TWAPs. That would be just crazy. So yeah, as long as we have a good DEX on that L2 or Chainlink, that also works, and we're good.
Awesome, thank you.
Hey, DeFi Cafe, I think you had a question if you want to go ahead and ask it.
Yeah, super interesting stuff that you're doing, guys. I got kind of a technical question around your control theory. You mentioned PID, and I'm happy to kind of take this offline if you don't have the answer for it at the moment. But do you know if the system will be like provably stable with like Ruth-Hurwitz stability criterion or anything like that? I'm aware that like PIDs are very robust and deceivingly simple, but you can make a stable system unstable with the wrong parameters pretty easily.
Yeah, so the stability of the system, are you talking in the context of interest rate, or there is like a bunch of moving things in that system? Can you precise what your question a little bit?
Yeah, I mean, if you've got a system and then you've got a controller in front of it, like a closed loop control system, you can, based on like linear algebra, you can prove that a system with a controller is inherently stable. Do you guys have any like a white paper to prove that or anything?
Okay, so that mostly applies to our interest rate model, because that's exactly kind of that's the place where misconfigured could be could have actually pretty wild ride
Absolutely.
for silos, right? So that's really I think that's what we're aiming at. So we don't have a white paper. We are, however, doing active research, and we are designing this. And our approach overall is that we're planning to do very conservative config at the very beginning.
Gotcha.
So we prefer for system to be, well, I'm kind of butchering the idea here, but we prefer the system to be slower and kind of lagging rather than overshooting, because that's more dangerous than alternative scenario. So that's our solution, and that's why I really stress the importance of collecting data on the markets and kind of researching on the fly how the model reacts, because that will be used for actual tuning of our models, right? So after we launch, after we get live data of our system, that's when we actually do the true awesome model and config for that model. And then we will just swap these models on the fly using governance. And that's where the coolness regarding the model really starts.
Yeah, cool. Glad to hear you're taking a conservative approach, and it sounds like you certainly understand what you're doing, because yeah, wrong like integral parameters, and you can put a system into oscillation and rates will go all over the place. So super glad to hear that you're doing the research and starting conservatively.
Yeah.
John, do you have any questions? I would love to show everybody a quick demo of this prototype for Silo UI UX and ShapeShift, but maybe while we get everyone to open up the Zoom so that they can follow along, you can keep us busy with the question.
Yeah, I was actually just about to turn it over to you, saying that it might be a good time to look at that. But yeah, I guess maybe a little while we're opening that up, and that could be the next thing we do for the Silo team here. Maybe you could give us a little more about what's going to be happening with your upcoming token event. I know there's some sort of like, I don't know if it's like a Dutch auction or exactly how that's going to work, and also maybe a little more detail about what the Silo token is going to do. I assume it's a governance token, but is there going to be any other utility to it or anything you could give it the community on that?
Yeah, no, of course. So we're auctioning. So the idea of we want to decentralize the protocol, and the question or the challenge has been, how do we do it fairly, and we give everyone a chance to participate, and not only participate, how do we foster a great community without any resentment? What I mean with this is, how do we make we fix the price of the token while reaching a fair value for the project. So that's where Gnosis auction comes in. And when the auction starts on December 6th through December 9, the community will place bids. Everyone will place the bid they like, depending on how they see or the value that they see Silo will deliver. And then at the end of the auction, when the auction closes, everyone will pay the same token price. So for example, if you bid, say, $1.5 per token, but then the token ends up 80 cents, everyone will pay 80 cents and you will get more token. So the allocation happens that way. And of course, it'll take 4 days. So it's not like Balancer LBP where everyone outbids and then buys and then sells back to the pool, and everyone ends up paying different price, and with a lot of people paying high price for the token and only to lose money later. Unlike that, Gnosis auction takes 4 days. Everyone in a relaxed manner, kind of place the bids they like, and eventually those who win in the bidding competition or in the auction will simply receive the tokens immediately, and they all will have paid the same price per token. And that's why we establish a strong community around us, because no one has kind of overpaid for it, and that's a floor price. And we also ensured that for 6 months, the circulating supply will come almost 100% from that auction. So that's why we we did it that way. We wanted to be fair and establish great culture of transparency and fairness and togetherness for the Silo DAO, and Gnosis auction seemed just the perfect solution for us. So that's about the first question. About the second question, we actually intentionally only designed the governance utility, or basically governance into our token. We wanted the community to decide. We're raising in the auction. We're raising mainly for protocol owned liquidity. So hopefully the DAO will have a lot of money, so they can. The community can decide, do we seed some silos like USDC ETH, for example, and offer the best, most secure silo on the market today? And then, of course, with the yield that will generate, we can easily direct it from the treasury. And then the token holders can say like, hey guys, let's improve our token model. Let's distribute rewards. Any mechanism can be designed, but we really wanted to leave it to the community to do that. And of course, we're going to help them. We're going to get the experts to help with the design, but we wanted to start with kind of clean slate from the beginning.
That's super cool. I really like the approach you guys are taking with this token option. And I don't think I'll be able to resist participating in it myself, but because I'm bullish on Silo, but also just because it seems like a really cool, novel way to fair launch a token. And I love the fact that you guys are using all the funds raised just to go straight towards protocol liquidity, which will hopefully result in some pretty healthy liquidity on day one, and won't require you guys to then do any liquidity mining programs. AJ and Ed, have you guys had the chance to open up this Zoom link in the stage chat?
Yeah, opening it now.
Awesome. Everyone, please jump in there. It's going to be a pretty cool demo, courtesy of Beard. Shout out to Beard for putting together this prototype so quickly. Let me see. Weird. It's giving me. Okay, here we go. All right, can you guys see this?
Yeah.
Cool. So yeah, really excited about the UI UX potential with Silo in particular. We think it's a really good fit for the ShapeShift UX compared to other lending protocols where there's just like a set pool of assets available to lend and borrow. So we wanted to put together this example prototype just to get some early feedback so we can keep iterating and ideally get some good user feedback on this before we actually start building it. So this is like the kind of what the new app looks like. I don't know if you guys have seen the new open source ShapeShift, but it's soft launch on app.shapeshift.com. And this is basically what the asset pages look like. So this would be like the view for if a user is on a specific asset. And one of the cool things about Silo, because you can use any asset as collateral and borrow any other asset against it, we were thinking that any asset that's available on Silo could kind of just have this lend and borrow component right underneath the trade component. So in this example, this user has 300,000 DAI available in their wallet. So they can come and they can basically input an amount they want to deposit as collateral. One question that we did have for you guys was a lot of lending protocols, you have to do this thing where you like deposit and then you enable as collateral. Is that going to be the same convention with Silo?
Well, yes and no. So by default, we're actually planning to do this the other way around. So every deposit is used as collateral. But if you, for some reason, don't want anyone else to kind of be able to borrow your collateral, then you can opt out. So kind of reverse what everyone else is doing.
So I think this UI could still work. Willie and Beard is probably listening, because what you could do is you could just have it toggled on by default and then let someone toggle it off if they don't want it.
I love that. I like that you guys are making it the default, because obviously if someone's depositing into a lending pool, probably their default desire is for it to be enabled as collateral. So it makes a lot of sense.
Yeah. We're DeFi users, so we're annoyed with existing solutions, and that's why we created kind of like in the demo this quick borrow, where you do multiple, you basically bundle a couple of transactions in one, because it seems that's the right way to do it, and you guys kind of got it really well.
That's awesome. And so in this example, you can see that this user already has some collateral deposit. And so this could be another asset, which is pretty cool. This could be maybe some USDC or even some Fox potentially. So the user can just really easily input the amount that they want to deposit, and then they lend. And then on the borrow side, you could also, for every asset, you could both lend and borrow if it's supported on Silo. So here, this user, you can see they're already borrowing 95,000 of some asset. This doesn't even necessarily have to be DAI, but you can see their overall borrow limit. In this example, they have $500,000 of collateral deposited, and we're assuming just an 80% borrow rate here. But from what I understand from hearing you guys earlier, it seems like this borrow limit will vary from asset to asset. So we'll kind of have to have like a blended borrow limit based on what collateral the user has deposited. But they could say here, they could see here the total available to borrow, how much they're currently borrowing, and then if they input an amount that they want to borrow, they could see how that will impact their borrow limit. So here you can see they're going to borrow another 224 DAI. It's going to increase their borrow limit from 25% to 80%. That's basically it. Obviously, there's more stuff that happens after you click borrow and lend, but that's kind of more of the easy stuff. What do you guys think about this like initial high level UI UX for specifically on the asset page? We could totally have other views of Silo, but I thought this would be a cool way to give users the ability to really easily lend and borrow any assets supported on Silo.
Yeah, I think this is pretty cool, and I like the simplicity of it, and that's really also why we went with this kind of quick borrow function. But I also want to share the feedback that we also got from kind of our early prototypes is that there are kind of two types of user. The user one that wants to just quickly borrow and just, and I'm kind of that kind of user when you just, okay, I also want to borrow A for B, just give me that token, please don't bother me, right? And that is perfect example of that. And the other user is actually someone who wants to see every single step what is really happening. So for that user, we've been told that we probably need to do something more advanced and kind of explain, the intermediary process of moving the bridge asset and give more information to the user. So that's the kind of feedback we got from other people as well.
Interesting. So like, do you mean kind of like how on like 1inch, for example, they show you the full route that your token swap is going through?
Exactly.
Kind of like
Full
showing
route.
that.
Exactly.
Yeah. Oh yeah, that'd be
So
super cool.
So technically, when you deposit A to borrow B, you're actually you have multiple positions. There is of course the deposit A, and there's the borrow of the bridge asset, and then you take that bridge asset and you deposit it in a different silo, and then you borrow B. So technically, you're 4 steps. So yeah, that's kind of the route the user takes, and that's why I think it would be cool to have kind of like a quick swipe-like experience. For the user that is familiar with how the process works, and maybe for the new user or some users that would like to see the entire route. Maybe, but by the way, both can be, I think, added or developed into the same UI. But yeah, that's kind of the feedback that we've heard recently.
Super cool. So how have you guys been getting that feedback too? Do you guys have you been working on your own kind of prototypes and mockups for a silo interface, or how have you guys gotten like the feedback so far?
Well, the feedback I mentioned was from our advisors that they are also using this protocol, so like they're also users. So that's what I said. Like there are different types of users that have different expectations. So I'm one type, our advisors are the other type. I'm guessing that if we go after community feedback, we will get even more information. So that's probably what we're going to do in the future for sure.
That makes a lot of sense, and I think it resonates a lot with kind of the ongoing challenge that we've always had at ShapeShift, where we're trying to make some complex stuff really simple, but we also we want to be a great experience both for new users who are wanting to get started, as well as the really advanced users who typically are the power users for these DeFi protocols. And I like to think we've done a really good job. I don't know if you guys have done any of the farming in the or liquidity providing in the mobile app, but if you do, you'll see that I think we've got the best UX in the biz there, and it's pretty cool because we have this like whole flow when you first get started that you can skip if you want to. If you already understand how all this stuff works, you can just skip past it. But if not, it kind of takes you through step by step and does we went through multiple rounds of user testing with people who have no crypto experience to try and figure out what language actually makes sense for a concept as novel as providing liquidity and farming it. And I think that worked out really well. So I thought we could do something really cool here where it's your first time using a lending protocol and you can detect that. We could give you some optional education. And also, I love those order routes. Like, I think the order route thing is something that can both be useful for the advanced users, and even if a new user doesn't quite understand it, it's cool education. It doesn't really like confuse them. I don't think it would stop them from proceeding through the flow. Yeah.
No, I love it. I love the simplicity. I think you guys obviously you're well entrenched in UI and UX, so it's great that kind of like you can develop such simplicity. Yeah, great. Love it. Thank you so much. Thank you.
Yeah,
appreciate the demo.
Thanks for the feedback. And yeah, this is just our first draft, so looking forward to iterating this a few rounds and getting it to a really good place before we even start building.
Awesome.
Yeah,
great.
Definitely.
What's the timeline look like, by the way? Like, at what point are you guys planning to have borrowing and lending be available so that we can kind of plan around it? Because we would love to be available on the day you guys launch, have an interface ready to go.
I think we can kind of give you some preview before we launch, because obviously smart contracts have to be ready way before launch because of an audit and the whole process of making sure they're secure. And regarding the UI, I think the simplest UI will be ready before or around our audit. So we can. Well, I cannot give you exact date because we're really like considering that we just graduated hackathon, and we're running into launching to on mainnet. Obviously, it's very hard for me to estimate exact date, but definitely before the release, we can share with you what we have so far, and you can take a look, and then we can work together on on solidifying the experience, and we can share feedback from our end, and give you even more details about how the underlying protocol works, so you can figure out the UI for our user, and yeah, I think that could be done.
Yeah, definitely. We'll align very closely with you guys. I mean, on this fantastic, great start. I think this UI looks awesome. I think so many things can be built on top of that going forward. I think UX is a major problem, and especially that if we want to all scale, DeFi to the mainstream, I think we need definitely to do a lot better job, and I think you are doing that. So it's really fantastic.
Awesome. Well, really looking forward to working with you guys as we get closer, and I think that timeline will work out well for us too. So on that note, I think there was a question around the ShapeShift investment. So we made this investment, and I don't know if we talked about that yet, but what exactly does ShapeShiftDAO get out of the 50K that we invested into SILO seed round?
Well, so we, I mean, I think you guys will participate in governance. I think you'll be part of the community. I think it's great. I think the UI is just the beginning of it. I think the beginning of the partnership going forward. I think the UI. That's one of the ways to scale our markets. Actually, we need ShapeShift to kind of focus on this UI and kind of user acquisition side. But other than, I think governance is definitely a way. The alignment between these two DAOs now happens naturally. It's really at the beginning of it. It's the only DAO we've taken money only from really individuals, builders. So I think the entire team was super excited to have received investment from a DAO. And I think now if we kind of, if possible, I would have taking money from DAOs and individuals. So I think really I advise personally that anyone any project actually to really align with DAO, especially like as like a DAO like yours guys. I mean, it's well aligned, it's transparent, it's strong, and has clear vision. And I think so we hope that this just starts the alignment going forward.
It's actually a funny story. Probably IHAM will scream at me later on for telling this, but it's what he said. After the ShapeShift kind of investment was the DAO ShapeShift DAO investment was confirmed. He said, I wish I contacted more DAOs. Like I had, like, no one thought it was such a simple thing to do, but no one thought about reaching out to DAOs. It's like we naturally we went for like builders, we went for people from DeFi that could advise us, that could bring value to the project. Obviously, like no one thought about the DAOs, and DAOs are it was just funny the realization at some point, like, man, I didn't think about this.
Yeah, I think that's thanks to really within the team, they're the face of the DAO, at least kind of like facing the community. And then we see a face when you talk to people, then you understand the vision of the DAO. That's really, really important when you have these advocates and kind of sort of spokespeople of the DAO. So really, personally, I was really excited to see that. And I think any builder, when we have this tendency of just, okay, let's go and raise from individuals or people that are repeatable in the business, but they forget that certain DAOs can actually help. We can align with them, especially if you know that they can strategically benefit you, which we do in this case. We think that the mutual benefit So at one point, I think we can start for all the liquidity that comes through ShapeShift UI. There will be definitely a way for you to monetize that as well. So it's kind of like the certain an automated way that will benefit ShapeShift DAO. So I think there's so many ways, so many things that can be done.
Yeah, we're super excited about all of that, and we see that too. And for us at ShapeShift, this was super cool because it was actually the first time that the DAO we had just passed our Treasury Management Diversification Committee, and they were set up to move rather quickly to make an investment like this. So I'm sure this will not be the last such investment that the DAO makes, but it was really cool for Silo to be the first and to demonstrate that. One question from the audience, just back on the on what the investment means for a sec. You mentioned obviously participation in governance. I'm pretty sure that means, obviously the DAO is getting an allocation of Silo's tokens. Can you talk a little bit more about that and what that vesting schedule might look like, just so the community understands?
Absolutely. So if you go to the Etherscan, you see like a bunch of smart contracts, and these are vesting smart contracts. And ShapeShift has one. I think it's public. So it works like this. So there is a lock for 6 months, and all tokens, of course, vest to ShapeShift DAO Treasury. So there is an address there you can verify. And the tokens are they start vesting per second. Of course, Ed can provide more details to that, but they're locked for the first 6 months, and then they vest linearly for another 18 months. So total vesting schedule is 24. 6 months of them are you have the lock on the tokens, and they're transparent. Their smart contracts can be verified at any moment.
Actually, you can go to our token on Etherscan, and you will see all vesting contracts, all balances. Like it's all deployed, it's all verifiable. All source code is verified as well. So like it's all there on the on the spot. You can see everything.
Awesome. Yeah, thank you so much for that that info, and that's awesome. Yeah, we're definitely looking forward to that, and we look forward to the DAO itself being involved in governance as the platform gets moving forward. Actually, so I have one other question on that, which makes sense, is that with that vesting, does that mean that that it'll take 6 months basically, sort of before the unlocking, and the DAO can participate in governance? I assume there's no way to participate in governance ahead of that.
As of now, yes. We've been actually asked that question multiple times, and we are actually considering using the option governance like Snapshot, and we're actually discussing with multiple people that it might be a good idea to use Snapshot strategies to actually include the vesting token in the governance, off-chain governance at least. And also our strategy for the beginning of the protocol is that we're going with multi-sig governance. At the very beginning, the multi-sig participants will be governing the token, the protocol. And the reason for that is launching a lending market is actually a big undertaking, and we did everything, and we're doing everything in our power to make sure that this is secure, just in case something happens and we have to act quickly. It's not a very good idea to have a time lock and lock up 2 days and wait for voting, and week 7 days waiting is eternity in DeFi, and we need to be able to act quickly. And then after we see that the protocol is stable, and we feel comfortable with it, and multiple audits obviously already happened before the release as well. We're going to move the full governance to the DAO, to the Silo DAO, and never look back, I guess. And from that point, governance is in full control of the protocol.
I just want to add something. So this multi-sig, for example, can adjust collateral factors on some silos, can do things, but it cannot control the treasury. So everything we raise is 100% governed by the token holders. so that we have zero control over. So it was very important for us to maintain this in the control of the community. So we just adjust some factors, collateral factors, and we can do some fixes. But we have zero control over whatever we raise or whatever happens in the treasury. It's 100% under the control of token holders, the same people that will buy in the auction.
Yeah, that's a good point. So what I meant by like kind of early control is rather the most probable scenario is actually that question already been asked in this call is about the model and dynamic interest model. And when we launch with the model and we see that, okay, the model is kind of acting crazy, we have to tune it down. So like we cannot wait 7 weeks we cannot wait 7 weeks for the model to just constantly overshoot on the markets. So we have to act quickly and switch the model to something that is more conservative and more stable. And that's the kind of use cases that we're seeing, and that's why we want to have a way to act quickly. But like I have said, we have no control over deposits. We're not using proxy. Every silo is a deployment of the contract. So there is no way for us to have any control over silo deposits. There is no way for us to have any control over treasury. The only people that will control that are depositors and token holders, which having the 6 months lockup, like we have no control over that whatsoever at this point.
Makes a ton of sense. And yeah, we're taking a pretty similar approach over at ShapeShift with our DAO treasury. So we're over time. This has been so fantastic. I really appreciate all of the great information and alpha you guys have shared with us today. To wrap it up, I wanted to make sure everyone knows about this public token auction for Silo that's starting on December 6th. So I posted a link in the stage chat for anyone who's interested in checking that out. I did want to ask, is that available to United States individuals?
Yeah, well, unfortunately, we advise everyone to really read our papers and see. And the Gnosis auction is permissionless; anyone can access it. And the only thing we could do to just make sure that we are compliant, not that we're not, but just to make sure, simply honestly, because I live in the States personally, so I want to try to make sure that the token is 100% utility, but just in case. SEC has a different, opinion. So we implemented this kind of restriction, which is kind of geo-blocking on whitelisting. I personally hope that people will make the right decision for themselves. But from our perspective, we've really done everything we could do to make sure that the token ends up in the hands of the people that should participate.
Makes sense. Well, thank you guys so much. Really
Yeah,
looking forward
thanks so much for joining us, Silo team. This was a great discussion. We're looking forward to collaborating with you moving forward. And let's certainly keep in touch between our communities and keep updating each other as your processes move along so that we can be there to support you.
Appreciate it. Thank you so much for your time, guys. We're super excited. Thank you.
Guys.
Okay. Bye-bye.
Awesome. Have a great day.
You too. Bye-bye.
Thanks all.